Shell had indicated at least 18 months ago that it intends to sell off some of its assets in the Niger Delta. Do you see it as a preemptive strike in anticipation of the petroleum industry bill?
No, I don't. I take a different view. And the view is that Shell clearly is trying to rationalize its assets. I mean, if you understand where Shell is coming from, I mean, from about 1937 or so, they've had, I mean, at that point in time, they had the whole of Nigeria, you know, and gradually other players have come in over the last 50 years. And Shell has ended up with still the majority of the assets in Nigeria with small oil fields and large oil fields. So you have oil fields producing 3,000 barrels a day. You have oil fields producing 200,000 barrels a day. And globally, Shell has felt that it has a need to rationalize its assets so that it can put more control, put more focus on the larger assets and thereby sell off the smaller assets to Nigerians in the spirit of the liberalization that is going on in Nigeria today.
Obviously, Shell's got assets somewhere in the region of $150 million up to about $2 billion that are on sale. Any local players that have indicated that they're interested?
Oh yes, most of the concessions have been. I mean, today I think they've sold, or rather, they have signed SPAs with about 4 or 5. Players. This is in this current round, the round of 4 oil blocks and the 2 previous rounds. And most of them are Nigerians. All of them are Nigerians, with clearly, with international partnership.
Oh, okay, let's talk about how Shell has been operating in Nigeria. As you say, they've been the international company that's really dominated the space, but they've had some sort of a tacit agreement and a joint venture in some areas with the National Petroleum Corporation of Nigeria, also with Egypt, Nigeria, Total. How are some of these partners responding to these asset sales?
I think they're responding well. Mind you, what has been put up for sale is the joint ownership in these concessions of Shell, Egypt, as well as Total. So essentially you have about 45% thereabouts of the interests belonging to the 3 players being sold. Then you have the NNPC on the other hand, holding 55% of the assets. NNPC, we have heard that NNPC has the right, I mean, clearly NNPC has the right to preempt these sales, but to the best of my knowledge, NNPC hasn't preempted any of the sales. And, I think the sales will go through, at least for now.
I want to talk about this liberalization that really would be manifest under the petroleum industry bill once it's passed. There is a huge emphasis right now in Nigeria on getting local ownership on the very strategic resource that is oil, which many Nigerians feel is their birthright. In the context of some of these reforms, it's also been said that authorities have urged companies to suspend any new programs that they'd be investing in so that ultimately the space starts to create entry for local companies. So in many ways, some could argue that there's a changing tide of liberalization and indigenization in Nigeria that's ultimately going to force a lot of the international oil companies to take a step back.
I think it's about time steps are being taken back. Essentially, the oil companies have quite a lot of assets, very small assets that really should, I mean, as the Nigerians say, should belong to them. So you have oil fields producing 10,000 barrels, 15,000 barrels, that the Nigerians could rightly claim to have the expertise to run. So I think you will find over the next couple of years, over the next 5 years in fact, that a lot of these fields are going to be transferred to the Nigerians, are going to be sold to Nigerians, and the IOCs are going to end up holding on to the big oil fields. So I don't think it's such a bad idea for Nigeria, quite honestly.
Feasibly, though, how is it going to work in terms of financing some of these deals? Because we do know that the market crash of 2009 had a lot to do with the fact that oil companies locally and oil marketers in Nigeria had to incur huge debts from Nigerian banks in order to fund some of their projects, ultimately not being able to finance that debt. So there is the historical issue of not sufficient liquidity to finance major oil transactions locally?
I think you'll find that since 2008, 2009, a lot of the Nigerian banks have rebuilt their balance sheets. There is actually a good level of liquidity in the market today, and you'll find that while they're going into it, while they're going into financing these assets, a lot of them have learned lessons. They have built up their expertise in in financing oil and gas, and they have also put several steps in place to manage the risks. For example, at FCMB, what we have done in the last few months is just get a hedging policy going, whereby if there is a fall in oil prices, we will at least be able to protect the payment of our debts. So Nigerian banks are building up the capability, and you will find that gradually a few of them are going to be doing more of these deals. At FCMB, certainly we've done deals, we're doing deals, and I think Nigerian banks are getting ready. You'll find maybe about 3 or 4 banks who are capable of doing this today.
Hakeem, what about...
So I don't see much of a problem.
What about the security issues? Because Shell has borne the brunt of militancy in the Niger Delta. Despite the amnesty, there is still a sense that oil production is not at its optimum because of some of those social and political tensions in the Niger Delta. For any local or international investor prospectively who comes through to buy some of these assets, that's got to be a concern.
I think the concern really was that, a lot of the IOCs perhaps may have over the years got out of touch with managing, with the communities that they operate in. And this is where the Nigerians coming in actually presents a good omen, for the industry. You'll find that the Nigerians who have managed the oil industry, who have managed oil assets up to date, have managed it well. You have quite a few, players in the market who are operating without any disruptions. So I think that in these communities, Nigerians may well be able to manage the risks better than the IOCs.
And finally, once the petroleum industry bill is promulgated and there's clarity and the environment is a lot more certain, what do you think the opportunities, or where do you think the opportunities lie? Because Shell has indicated that what it wants to concentrate on is exploration. And many experts looking at the Nigerian environment say there's still so much untapped potential because not enough is invested in exploration.
Correct. Exploration is one key aspect. Nigeria today has probably about 34, 35 billion barrels of reserves, has aspirations to get up to 40 billion. Exploration activity has really not picked up, over the last 3 or 4 years. It's just picking up. I think with the IOCs moving away from the smaller assets, they're able to go into the larger assets. They're able to do more work. Those are the kind of activities that involve a lot of cash, billions of dollars. And with the liberalization, with Nigerians taking over the smaller assets, a lot of them are actually spending money just going into those old fields and bringing up a lot more reserves than the IOCs were able to cope with.
I think
so I do see a lot of prospects. I also see a lot of prospects for the Nigerian financing industry because some of us are building up the capacity today, it can only be a win-win. The equity markets, I think, are also going to gain from this because some of these companies, some of these local companies are going to need equity capital. They're going to go into the stock market in the next 1 or 2 years. Some of them are even talking about going into the AIM market, into the international markets to raise capital. So it can only be good for Nigeria, but then let's wait for the PIB to be passed.